There was a Zweig breadth thrust last week. That was a mouthful. A breadth
A ZBT.
bread TH thrust. And what that means is stocks go from really oversold to really overbought in 10 days.
So a huge reversal.
And what you're measuring is panic selling to panic buying. And when panic selling to panic buying happens in a short period of time, historically, quantitatively, that has been the bottom. So Ryan Dietrich has a chart showing all of these instances, and the market was higher 100% of the time, both 6 and 12 months later. And it looks like, I don't know, what is there, like close to 20 on this list? Ryan also says, he has 2 more data points, all saying the same thing. To say this one more time, what we've seen the past 2 weeks isn't what you see in bear market rallies. More than 70% advancers on the New York Stock Exchange 6 times over the past 10 days. Never lower 6 and 12 months later for the S&P 500. And then finally, the S&P 500 is up at least 1.5% for 3 days in a row. This is not stuff you see in bear market rallies or short covering rallies. You see this before times of strong performance, higher 10 out of 10 times, and a year later, up 21.6% on average. Now, I love these data points because this is capturing psychology of the market, right? It's capturing what happens when the crowd goes from, oh my God, get me out, to, oh my God, get me back in. And Ryan charts us out, and 100% hit rate doesn't mean that this can't be the time that it fails. I guess what I would say is, like, there will be an impact on earnings, surely, no? And you would think that sentiment, valuations should get compressed. We shouldn't be trading at 21 times earnings the same way we were before all of this happened. Like, there should be some sort of impairment. Now, I guess maybe a counterpoint is like, all right, I mean, this is ridiculous. I'm grasping at straws. I'm just throwing shit against the wall. Well, the S&P 500 is down 5% year to date. That's still, I don't know, 900, I'm making this up, $800 billion in market cap wiped out, whatever the number is. It's still like not nothing.
My devil's advocate here would be just that markets move faster than ever. When trying to put these moves in the context of past moves, that'd be my only pushback. That, well, what if this is different? I guess the other thing would be maybe the stock market is saying, you know what? I'm sick of all the sentiment readings saying we're going to go into recession and it doesn't happen. Show me a recession this time. If we get a recession and earnings do slow considerably, then I'll fall out of bed. But show me first.
Nah, it doesn't work like that.
Too cute?
It doesn't work like that.
But you're right. If we get a recession, the stock market is going to it's going to test the lows again. It has to.